Which two Asian markets have outperformed the US, European, Japanese, and Chinese stock markets on a 6-month and 12-month basis? Korea and Taiwan. On a year-to-date basis, the S&P 500 has done better than the Kospi, but continues to lag the TWSE by a long way. But I reckon the Kospi, even the Kospi, could beat the S&P 500 again over coming months. Why? Well, it's all about the semiconductor cycle. The outperformance of Korea and Taiwan have been driven by their chip-making giants, Samsung Electronics, Taiwan Semiconductors, and to a lesser extent by United Microelectronics. There is a global scramble for semiconductors, which is a continuation of a rising semiconductor cycle that started in 2019. And I reckon there is another 1 to 2 years for that cycle to run. Now, two factors have transformed a cyclical upturn into a mad rush for semiconductors. One, the pandemic has driven a surge in demand for consumer electronics and even for automobiles amidst an aversion to public transport. And these are all driven by semiconductors. Two, geopolitical tensions between the United States and China have prompted China to stockpile chips and chip-making equipment in the face of US technology trade restrictions. The manufacturing of semiconductors is almost a duopoly, with Taiwan and South Korea accounting for around 83% of world processor chip and 70% of memory chip production. And given the large capital expenditures and long lead times to add new facilities, up to 3 years to build a fabrication plant, the supply situation isn't going to change much for quite a while to come. On the demand side, even when the pandemic-driven buying of electronics and automobiles eventually subsides, the structural drivers will persist. That is, the semiconductor content for each unit of GDP will continue to rise as the automation and the Internet of Things gathers more momentum. This will be especially true for China, which is seeking to raise the quality of its growth. So if you like the semiconductor story, how do you invest in this? Well, our research team likes Samsung Electronics. 38% earnings growth for FY21, 29% for FY22. Price to FY21 forecast earnings is around 15 times. Now that's a very attractive PE to growth ratio of only 0.4 times.